Hi, I'm Jim Davis. I'm treasurer of the club. Every quarter we publish a report to disclose the financial results of the association, and I found that very few people seem to read that report. So I thought it would be a good idea to do an audio where I covered the key areas of that report. The actual report for the third quarter will be published in a couple of weeks. We have been and continue to be impacted by COVID-19 restrictions. We just don't know how long this will last. Our operational plan has been to provide a safe environment for our members and our employees. Another key part of our operational plan is to retain our employees. We work very hard to hire and train our employees, and they're too important to us just to let them go. The biggest impact of COVID restrictions is a revenue loss, both in food and beverage and in loss of guest income, as we've restricted guests. Our financial plan has been to control our non-payroll costs to moderate the impact of revenue loss. And the second part of our plan is to obtain a PPP loan, which would provide money to retain our employees and help offset the COVID restrictions. This slide is a very high-level look at our year-to-date results through September. It excludes any PPP money. Member assessment, what is that? That is the money that we bill the members to pay for the operating cost of our club. For accounting purposes, we prorate this money evenly throughout the year. So this represents 3/4 of our member assessments. It's always an on-budget number. Net expense is the net cost to operate the association. We do have some revenue items like food and beverage sales and golf merchandise sales, and we do have fee income revenue, and this is offset by all of our operating costs. So for the first 9 months, we had a deficit of $81,000 versus a budgeted profit of $29,000. So we were worse than budget by $110,000. This next schedule breaks down the net spending that I showed you on the previous slide. So there's two components to net spending. The first is what we call product revenue, net of direct cost. That is food and beverage revenue and golf merchandise revenue, less the direct cost for the items that are being sold. That is food, beverage, and merchandise. For the 9 months, we're $426,000 below budget, which is almost 25% of our budget. This is the main impact of COVID. Operating expenses. This line is all of the operating expenses. It includes our payroll cost, non-payroll cost, including supplies, insurance, property taxes. There's a variety of things that go in there. For the first 9 months, we were $316,000 better than budget. So the net spending in total for the first 9 months was $110,000 worse than budget. You can see here what I described as our plan. We're trying to moderate the impact of revenue loss with expense controls. The second part of our financial plan relates to the PPP loan. What's a PPP loan? Well, when the pandemic hit, the government put some programs in place to funnel money out into the economy. And part of that, one of their programs was a PPP program. It's designed to give employers money, an incentive to retain employees. The term is 5 years at 1%. They can be repaid at any time. The funds must be used for eligible expenses per the Act. What are eligible expenses? Payroll, utilities, lease payments, mortgage payments. So there's 2 steps to the PPP loan. The first step is you must apply and be approved for the loan. In April, we applied and we received an $837,000 loan. The second step is to apply and be approved for loan forgiveness. Well, why did the government set up this second step? It's because they wanted to make sure that the people that receive the loans use that money for the expenses that they intended. So as far as we're concerned, we've just taken our first step to apply for this forgiveness last week. So we anticipate approval of our forgiveness application. We have a very high confidence of this happening. Why is that? One is the program was designed for forgiveness. The second thing is the main criteria for forgiveness is that you use the money for eligible expenses. We have done that. Finally, the bank does not want these loans to stay on their books. They've indicated they are going to work very hard to make sure that the application for forgiveness are approved. Lastly, the forgiveness of the loan will be treated as income when they are forgiven. So what is the total estimated COVID impact? We simply don't know because we don't know how long this is going to last. But we have tried to take a look at both 20 and 21 to see where we might stand. So for 2020, we think the impact will be $300,000. Now, I indicated earlier that our impact through the first 9 months is only $110,000, but you have to remember in the fourth quarter, a lot of members come back. Our plan has a lot of revenue assumptions about food and beverage and guest fees, so the impact will be higher in that fourth quarter. For 2021, we estimate the impact will be $500,000. So the question begs, why is it going to be so much higher than this year? Well, for 2020, we were only impacted for 9 months, and for 2021, we're impacted for a full 12 months, we're assuming in this calculation. That first quarter that we have to cover is, again, a high revenue month normally from members and guests. So the total impact that we estimate for this year and next year would be $800,000. So please understand, these are very conservative numbers. Our PPP loan is for $837,000 loan. The PPP loan will offset the impacts through the end of 2021. Let's talk about initiation fees. Real estate activity remains strong. We forecast 47 transactions in 2020. That 47 may be different from other reports you receive, and that is because there are some transactions where the members are buying a second property and they do not pay a second initiation fee when they do that. This will generate $939,000 in initiation fees this year versus a budget of $600,000. Properties available for sale are limited. As of this morning, we only have 9 properties for sale, 4 houses and 5 lots. The Finance Committee is concerned that the lack of inventory will limit future sales. We are in a bubble right now, and all bubbles will burst. On capital expenditures, we have spent to date $1,197,000. Most of the expenditures primarily are for normal asset replacement. The biggest expenditure we've had to date is debt paydown of $267,000. We've totally paid off the clubhouse renovation loan, and we've further paid down the golf renovation loan. We initially moved the Sports Center Light project to 2021, but we have decided to do this project in 2020. The total cost for that project is expected to be $140,000. So I thought I would address a couple questions that I've been hearing in the neighborhood. The first question relates to the PPP loan, and what impact will that loan have on our 2021 operating assessment? The answer is none. I previously walked you through how that PPP loan will work in our financial statements. The second question relates to initiation fees. As I indicated earlier, we're going to be $339,000 above budget this year for initiation fees. So the question I've begun to hear is, given that we're so far above budget on initiation fees, do we still need to have an increase in our annual capital assessment? We are still going to be asking for an increase in our annual capital assessment. We've been fortunate that the initiation fees are above budget. We have had an unusual amount of unplanned expenditures that required immediate attention this year. For example, we have a failing berm near a lagoon on Foot Point Road. We had to repair the drainage on the golf course. The bay window in the clubhouse had to be replaced. The wood frame was rotting out and the glass was fogging up. We decided to install non-touch plumbing fixtures throughout all of our facilities, both for COVID reasons and general cleanliness. And we also had to repair a potential failing electric line to the number 16 restroom. All these unplanned expenditures totaled $267,000. Even though we did have an increase in initiation fees, we did spend a good portion of that money on things that we felt needed to be taken care of. The purpose of this video was to give you some information about where we stand through the third quarter. We will be giving you full details and explanations regarding our 2021 operating and capital budget at the annual meeting. As treasurer, I believe that we have a solid financial plan to deal with the challenges of the pandemic. If you have any questions at all, please contact me. Finally, thank you for your time.